So, have you ever sent money to another country and just stopped to wonder what actually happens after you click send? It feels so instant, right? But what you're really doing is tapping into this huge, complex, and kind of ancient system. So, let's pull back the curtain and see how money really moves across borders.
And his quote, it just nails it. We're not talking about a single pipe here. Think about it. It's this massive, tangled network of pipes connecting every single house, every bank account in the entire world. If we can get our heads around this plumbing, it'll make perfect sense why sending money internationally can be so painfully slow and expensive. So, okay, what exactly are these global pipes? Well, the whole thing is built on an architecture called the Correspondent Banking Network. And believe me, this is the foundation for pretty much every single international payment you have ever made.
At its core, it's basically a club, a trust-based club. Banks all over the world agree to hold accounts for each other. And what this does is it lets a bank, say here in the United States, make a payment in Japan for you without ever needing to physically open a branch in Tokyo. It's all built on these long-standing relationships.
Okay, so let's trace the journey. Your payment doesn't just zap from your bank to the destination. No way. It's more like a multi-step relay race. If you're sending money from a small bank, first it hops to your bank's much bigger partner right there in the same country. Then that big bank uses its international relationships to send the payment instructions over to its partner bank in, say, Japan. And then finally, that bank in Japan passes the money to the small local bank at the finish line. See? It's a whole chain of handoffs.
Now, you might be thinking, wow, that sounds complicated. Why on earth do we still use it? And it really comes down to just one thing, reach. For all its flaws, and there are a few, no other system can connect to pretty much any bank account in any country in any currency. It is the only truly global network we've got.
Right, for this whole relay race to work, the banks have to have a way to keep score, right? They need some kind of shared ledger. And this is where things get a little weird. It's all done using a special set of accounts with these kind of funny names, Nostro and Vostro. Now, here is the absolute key thing to get before we dive in. Nostro and Vostro. They are not two different accounts. They're not two separate pots of money. They are simply two different ways of looking at the exact same account. It all just depends on which bank's perspective you're taking.
It's all Latin. Nostro literally means ours, and Vostro means yours. So let's say Bank A in the US has some money with Bank B in the UK. From Bank A's perspective, that's its Nostro account, as in our money that you are holding for us. But Bank B, looking at that very same pot of money, calls it a Vostro account, your money that we are holding for you. It's all about whose shoes you're standing in.
And this right here gets us to a huge problem. There's no single global source of truth. Every bank in that chain is just looking at its own little world of our money and your money ledgers. This whole fragmented accounting system is the real root cause of all the delays, the crazy fees, and the errors you see in the system.
Which brings us to something you've probably heard of, especially if you follow the news, SWIFT. This is a massive point of confusion for a lot of people. So where does SWIFT fit into this whole picture of correspondent banks and Nostro-Vostro accounts?
Okay, listen up. If you only remember one single thing from this entire explainer, please make it this. SWIFT does not move money. It doesn't hold funds. It doesn't transfer value. It doesn't touch a single penny.
So if it doesn't move money, what in the world does it do? Well, think of SWIFT as basically a super secure messaging app just for banks. It provides the standard language, the template, and the secure network for Bank A to send a message, an instruction, to Bank B, telling it to move money from one of those Nostro or Vostro accounts.
Here's the best analogy I've heard for this. Think of SWIFT as the secure email system for banks. It sends the message. The correspondent banking network, though, that's the actual postal service that picks up the package of money and delivers it. So SWIFT is the instruction, but correspondent banking is the action. They're two different but totally essential parts of the same process. All right, so now that we've got the pieces of the puzzle, we've got the correspondent banks actually moving the money, and we've got SWIFT sending the instructions, we can finally see why sending money overseas can be such a pain. I mean, all the big problems with the system are a direct result of this, well, pre-digital design. We're talking about high costs, ridiculously slow speeds, a complete lack of transparency, like where even is my money right now, and huge compliance risks for the banks involved. First up, let's talk cost. Remember that relay race? Well, every single bank in that chain takes a little slice of the pie. Bank A charges a fee, Bank B charges a fee, and so on all the way down the line. It's like passing a package between different couriers, and every single one of them charges you for handling it. And that's exactly why a simple transfer can easily end up costing you $10, $20, even $50, or sometimes a whole lot more.
And then there's the speed, or, the lack of it. The payment has to be processed one bank at a time during their specific business hours. So what do you think happens when a bank in New York is closing for the day, but the next bank in the chain over in Tokyo is just opening up? The payment just sits there. It waits. Now throw in a weekend or a national holiday in one of those countries, and you can see how each of these handoffs adds major delays. And that's how instant turns into sometime next week.
And there's another really serious side effect to all this. The compliance checks for things like anti-money laundering. They're so complex and expensive at each step that some of the big global banks are just deciding it's not worth the hassle. They're de-risking by cutting ties with smaller banks in certain regions. And that's a huge deal because it threatens to cut entire countries off from the global financial system.
So the problems with this old system have gotten so obvious that world leaders are now basically demanding a change. There's a huge global push to completely overhaul this fundamental piece of our financial plumbing.
And just look at how ambitious this is. The G20, that's a group of the world's biggest economies, they've set a target. By 2027, they want 75% of all international payments to settle within 1 hour. Now, when you compare that to today's standard of 1 to 5 days, you start to realize just how massive of a challenge that really is. When you boil it all down, the system that powers global trade, that lets people send money home to their families, that underpins international business, it was designed long before the internet even existed. Yeah, it still works, but it's really starting to creak under the strain of our digital world. And that leaves us with the big question for the future. What's it going to take to finally build a better set of pipes for the global economy?